Good morning. It's Wednesday, May 6th. President Trump pauses his ship evacuation plan and talks of prospects for peace. Tech stocks boom on stellar results, with Samsung at $1 trillion. And we speak to CEOs from across Europe about energy costs, inflation and demand.
OK, let's talk about where we are with these markets this morning. It's definitely risk on. Yesterday was pretty positive. Euro Stoxx 50 futures are up, let's call it 1.1% at the moment. The earnings story looks good, but the other driver is this, what is happening here. Brent crude is down circa 2% right now. Project Freedom is on pause. President Trump is making positive noises about talks with Iran. That is enough to get crude prices lower. If you want further evidence of that, look at what is happening with the dollar. I give you euro dollar. I'm going to show you another example in a moment. Euro dollar is up. The dollar is broadly weaker. I say that because I want that context to be in your mind when you look at the next chart, which is what is happening with the yen this morning. I think this is the fourth time the BOJ potentially have been in. I'm not counting, but it looks increasingly like that. This may be intervention. Obviously, we never get confirmation. You never get kind of a clear read on this, but it looks like the Japanese have been in the market once again. We're going to monitor that situation very, very carefully, and the countdown to the open starts right now.
Well, that didn't last long. Project Freedom then, on pause, as Guy was saying, finished almost as soon as it was started. The US president, again, with a significant rhetorical shift when it comes to his interactions with the Iranians, even if that is through a third party, saying there has been real progress in terms of talks. Great progress is what the president says. The blockade, of course, on the Strait of Hormuz continues. But for the markets, this is a reminder that this is a Trump administration and a president that wants out of this conflict, even if Iran is not at this point letting them out. And for the markets, that is enough to continue rallying.
I don't know what to say. One day on, one day off. How do you trade this market? How do you position in a portfolio when this is the kind of thing that you're having to deal with right now? It's going to change tomorrow, almost certainly going to change tomorrow. What do you do with this? They clearly struggle to make this work. It isn't working, so we're back to where we were.
Maybe to your point, Tom, the message that the market is taking is that the US does want out of this. Marco Rubio talking about how this is the end of offensive operations against Iran. Maybe that changes, Guy. But we do have, in response to that, oil prices lower, as Guy was saying, down by more than 2% as the ceasefire has held through all of that sort of flip-flopping. And the 30-year yield down as well, back below the 5% level. So maybe, if anything, that's the message we're taking this morning, at least.
So again, the linkages between the oil market and what's happening in the bond market. So we watch to see if that move lower in yields continues today. Of course, Japan is closed, so we're not seeing a print on treasuries today. But to your point, yields were lower yesterday. Brent currently down 2% at 107. WTI just below 100 at $99 a barrel, down 2.4%. So apparently Trump saying this came from Pakistan, this demand, or at least this request to put this operation on pause. And again, for some, it will appear as this is the Trump administration looking for options, running out of options. Is the focus, and should the focus be on what Iran does and whether or not they actually allow the president to move forward with talks and to open the Straits of Hormuz? But for now, the question remains, how do you trade this? And it seems that the markets are just looking through this because there's many other things to be focused on. Amidst the confusion, there's pretty clear clarity when it comes to the tech story.
Well, there is. I think there isn't probably clarity. Is this a melt-up? This looks like a melt-up. So what do you do, again, with this? How do you position around what is a very narrow rally in a series, like a handful of stocks? And how do you get involved with this? Most portfolios can't get involved fully and therefore are having to chase this. The hedge fund community was light. Is it having to chase it as well? You look at the put-call ratio, you look at the internals. They look very, very stretched right now. You talk about certainty. How much certain? When this ends, what does it look like? And how quickly could it unwind? Like the melt-up phases can go on for a very long time. Are we at the beginning of it? Are we at the end of it? How close to the end of it are we?
Yeah.
I don't know.
I don't think this comes with any, maybe we don't expect certainty. The gains are really narrow, and you can either cast that as a problem or as an opportunity, can't you? Because some are saying they're really narrow, therefore this is wobbly and shaky. Or they're saying this is really narrow, therefore there's a huge amount of opportunity for this to widen out as this starts to filter into other sectors, or if we get further headlines that suggest de-escalation and ceasefire continuing in the Middle East. That's just one view out there. But just to underscore what we're seeing in some of the tech stocks right now, I mean, the Kospi is up by 6%, and a lot of that has to do with Samsung, or it was up by 6%, I should say, earlier on. Samsung was up at one point by 17% in just one session. And this isn't the day they reported those incredible earnings. This is a few days afterwards. We remember that chip profits were up by 48-fold over at Samsung. It's taken the markets quite a little while to get their heads around exactly what this means for a business like Samsung.
This is why I think there is clarity, Guy. There is clarity in terms of the numbers. The numbers are there. You're seeing that 725 billion commitment on capex. You're seeing the numbers. 57% increase in the data center spend.
Why did Google
revenues for AMD? The Kospi is king. If you haven't been exposed to tech, you're not in the money. And the numbers are there to validate the story in terms of the upside that's been coming through for earnings. The numbers have validated the stock upside. And that has continued. Whether you look at the Kospi, whether you look at Samsung and SK Hynix, whether you look at AMD, whether you look at Intel and Micron, both up around 12% by the close yesterday.
You and I will disagree on whether or not this is still a cyclical industry. I just spoke to Sven Schneider about this. He's the CFO of Infineon, one of Europe's biggest chip companies. I asked him that question. He said he would be surprised if we were out of the zone of cyclicality. He still sees cyclicality there. He would be surprised if we do see he wouldn't be surprised if we see a cycle returning. Pay your money, take your choice on which one you want to bet on.
But maybe it can be. I mean, maybe it can be cyclical, but also deliver incredible upside, and we get in the short term confirmation of the numbers. So I suppose both in the interest of civility, I'll say that both could possibly be true. Let us talk about what we're getting from the earnings stories, shall we? Because a lot of that comes from tech. Did you mention AMD? I mean, that was an incredible earnings story overnight, just underscoring the tech theme. But if we move on to the tech theme, to other earnings we've had out this morning, Novo. Here's a bit of a twist and a turn. This is a stock that could be higher at the start of trade. A big sales beat coming through from Novo. This, of course, a much reduced stock from where it has been. But we've got profits coming through, margins coming through, all better than expected. A slight upgrade to guidance, only slight, and maybe that will be one area of disappointment. But they're talking about rapid adoption of the Wegovy pill. So that is one area that we focus on when it comes to the earnings stories.
Should we go from the pharma space to the auto space with an update from BMW? They're facing challenge, of course, in China. That is not a new story for them. Prices, of course, in focus. The margin in terms of the miss that came through in the first quarter. So it was a miss on the margin for BMW, coming in at 5% versus the estimates of 5.2%. Earnings fell 36% year on year. Sales down 8%. They have confirmed their full year forecast. But again, China is a challenge, and of course all the other headwinds, whether it's tariffs or the supply chain impacts as a result of the war between Iran and the US. What a difficult space to operate in right now, and margins are feeling the pinch for BMW.
Airlines also a difficult space to operate in. Lufthansa out with figures this morning. The German flag carrier, European flag carrier, lost less than expected. And the reason for that is that actually they're seeing a little bit of compensation when it comes to the long-haul business, which is slightly better than anticipated at the moment. Remember, they've taken flights down for the summer. They're preserving fuel. They think they've got around 80% of what they need, but they are flagging risks further down the road into this year in terms of the potential for fuel shortages, and that is a risk that is still there. But they think they're okay for now, and they're actually seeing some quite decent demand when it comes to the long-haul picture at the moment. Yeah,
it's really interesting to think about those fuel supply contracts, isn't it? And, they're all counting on them, and they're all pointing to them and saying, we've got it signed. We know we're getting fuel, but are any of them going to get broken under force majeure? So that'll be something we'll follow. Diageo also reporting numbers. A big focus here on the subdued nature of the consumer. We're also watching the build-up to the World Cup. Someone told me that's happening this summer. Guidance unchanged, so for Diageo. Third quarter net sales coming in above estimates. That is, one line coming through here. Progress on the redesign and new strategy underway. So those are some of the headlines. But as I say, focus on FIFA. Also, there's a tariffs complication here, because you remember first quarter of last year, and this is probably worth remembering for other sectors, first quarter of last year, there was a lot of inventory build, trying to get ahead of tariffs, wasn't there? And so this is something that this particular industry is facing. So we'll continue to watch to see if we get any commentary on that front from these CEOs.
Champions League before we get to the World Cup.
Yeah, May the 30th.
He's pushing buttons this morning, isn't he?
No, it's good. These are good buttons.
Oh, really? Okay.
1-0.
Catch me up.
Yes. Arsenal, Champions League, and more likely now to win the Premiership after a slip-up by Man City.
It's feeling a little better.
It's feeling a little better, but we're not counting our chickens. AB InBev on the drinks front was a massive outlier yesterday as well, in terms of the upside that came through for that drinks break at the beer story. And again, you were linking it to the World Cup yesterday for AB InBev.
1-0 last night. OK, let's talk about what else we've got coming up. Frans Muller, Ahold Delhaize CEO, is going to be joining us very shortly. Roy Jacobs, the Philips CEO, is going to be joining us as well. Eric Lai, Kongsberg CEO. We're going to take you into the defence space this morning. And Roland Veltsbacher, the Continental CFO, is going to join us. We're going to talk about tariffs and what's happening in the auto space and all that good stuff a little bit later on in the show.
We've just got confirmation that Ahold Delhaize plans to name a new CEO, so that's adding topics to our conversation on that front. Plus, we'll also be talking about these markets, of course. Helen Jewell will be with us, BlackRock Fundamental Equities EMEA CIO. We'll also be hearing from Andrew Puzder, who's the US ambassador to the EU, with tariffs in mind and the back and forth on the US-EU tariffs in train. We will look ahead to that conversation.
Yeah, that will be one certainly to stay tuned for. Let's think about what else we are zeroing in on throughout this day then. G7 trade ministers meeting in Paris. We've had a conversation, of course, with the French trade minister. We continue to keep an eye on that. 1:30 p.m. UK time, by the way. The US Trade Representative Jameson Greer will be on Bloomberg TV as well. So another interview to mark for you. At 9 a.m. UK time, the chief economist of the Bank of England, of course, Philip Lane, will be speaking on a panel on central bank independence in Berlin. He's been relatively hawkish. We'll see what he has to say. And, of course, Philip Lane, I should say, the ECB, not the BOE. At US data point, 12 p.m. UK time, MBA mortgages applications. 1:15 p.m. ADP employment change. And at 1:30 p.m. UK time, US Treasury quarterly refunding announcement. And on the earnings front, out of the US, Disney and Uber before the market, and Arm as well, which will be interesting in terms of another touch on the demand for AI.
Yeah, and a pivot in train over at Arm. You spoke to them, didn't you? You went to speak to Rene Haas when he announced this change in direction.
A major shift from just selling intellectual property and blueprints. I mean, I say just. Those go into 90% of smartphone chips globally, to actually designing and making their own AGI. They call it an AGI CPU. So a CPU that is used for inference. So when we actually use and ask questions of AI, that has to run on CPUs, and so they are now beginning delivering and shipping their own CPUs for the first time. So we'll see to what extent they're seeing traction for that.
How does that change the ecosystem?
Well, they think they could be... Well, number one, they're going head-to-head again with Intel on the CPU story. AMD came through their numbers yesterday, and CPUs and their exposure to inference was part of the upside for AMD. Yep. So there's a lot of players in CPUs. It's not a clear kind of clean play like AMD and Nvidia in the GPU space. There are a lot more players, so it's much more competitive. But clearly, they think Arm that they're well positioned. They have energy efficiency on their side, which is what they tout. They're good at that, and they think they can win in this space.
OK. Let's talk about what else we need to know this, Wednesday morning? Wednesday morning. Anthropic has unveiled new AI agents designed to handle financial services tasks, including pitch decks and reviewing financial statements. The new tools are aimed at professionals across banking, insurance and asset management, plus a bit of fintech as well. Anthropic is also deepening its financial industry ties through a new joint venture with companies including Blackstone and Goldman Sachs. The French President, Emmanuel Macron, has nominated one of his closest advisors to be the next Bank of France governor. Emmanuel Moulin was the president's chief of staff and previously served as Treasury chief. If approved, he will succeed, of course, Francois Villeroy-de-Galhau, who is retiring early at the end of this month. And the Dutch-flagged cruise ship at the centre of a deadly hantavirus outbreak will now set course for the Canary Islands after 3 infected people were evacuated. The World Health Organization has identified 7 medical cases linked to the cruise, including 2 confirmed hantavirus infections and 3 deaths. The agency is investigating whether limited human-to-human transmission of the rare respiratory virus may have occurred amongst close contacts.
Coming up on the programme, Brussels pushes Washington to adopt an agreed trade deal in the coming months amid simmering bilateral tensions across the Atlantic. We will speak exclusively to the US ambassador to the EU. We'll be hearing from him later in this hour. Plus, German chip company Infineon raises its revenue forecast on strong AI demand. Guy's been speaking to the CFO, Sven Schneider. We'll hear more of that conversation later this hour. Up next, though, we'll be joined by Frans Muller, the CEO of the Dutch-Belgian retailer Ahold Delhaize. There is planning afoot for management change, so we'll certainly get into that conversation amongst others. Inflation, cost of living also in focus. IB plus BBTV Go. If you want to get in touch with the team that puts together this programme, that is the function to use on your Bloomberg. This is Bloomberg. Welcome back. This is the opening trade. The European market open then is just over 40 minutes away, and it looks as if it could be really quite positive this morning. We have just enough of a ceasefire in the Middle East for oil prices to continue their downward path. We also have some earnings to factor in, plenty of those, in fact. And so European earnings point higher, stocks point higher, Guy. US futures also pointing higher, in particular a continued focus on tech.
Absolutely. We will continue to focus on that. But while we focus on that, we're also focusing on the grocery sector. Ahold Delhaize has reported an adjusted operating margin for the first quarter that's a little ahead of estimates. The Dutch-Belgian retailer has also announced a change at the top. Its CEO, Frans Muller, is going to retire, but not just yet. It's in 2027 story, and he's going to be replaced by Thierry Garnier, who's coming out of Kingfisher. I think he was at Carrefour before that for a long time, so has a lot of retail heritage to be joining Ahold Delhaize. Good morning, Frans. Let's talk about the numbers in just a moment. I want to ask you about your decision to step down. I imagine that this is a well-planned decision, that you are not going for a while. We know that it's going to be 2027. Why is Thierry the right man for the job? And you've still got a year in place. What have you still got left to do?
Yes, thanks for the question, and thanks for having me on the program. I'm super proud about the last 10 years of Ahold Delhaize, where our teams delivered a great result for the company, but also for consumers and for communities. And also this quarter, which we're going to talk in a bit about, I hope, was a very good start of the 2026 year, which is the second year now growing together strategy. A company with a strong foundation, and I'm pretty sure that also Thierry will see this foundation as a very nice base to work from. So happy to transfer with a year time. And as I just mentioned, it's good governance to be well ahead of time. But the 2026 year is a super focus for myself and the team here to make sure that we deliver on our numbers.
Okay, so what have you got to do in the next year? Because you say these numbers are ahead of expectations. What do you think you're doing right now? And what more of that do you think you now can do? How much better can these numbers get in the next year?
The connection. Can you hear me still? Because my connection was completely down. Can you hear me still? Yeah. Okay. Good.
I can still hear you, Frans. Yep.
Yeah. What is there still to do? There's, of course, a year with quite some volatility, geopolitical. If we talk about the Middle East, if we talk about Ukraine, and all kind of topics, and we in our grocery business have a strong duty to make sure that for consumers we do the best possible by making sure that grocery shopping stays affordable, healthy, and sustainably sourced. So that is in our mission. And also this quarter we have been very successful in this with positive volumes in Europe, with growth in the US, with e-commerce growth of 14% in the US. So I think strong numbers, which is also underbuilding the strong strategy we have. For this year, volatility, uncertainty is clear. So that's why our teams are laser focused to make sure that we save more on cost so that we can reinvest. We have a strong margin in the US, which gives some space to reinvest in pricing in the US so that the shopping is even more affordable. We have a strong program on private label and own brands to make sure that with the right propositions. And we are very alert on giving customers the best product, because customers are shopping more with a value focus, and we are ready for that as we were in the last quarters.
Frans, good morning. So you talk about a duty to keep things affordable for customers, but I wonder how you're going to cope with what people anticipate will be higher food prices as a result of what is happening in the Middle East. Will you therefore put up prices, or will you accept a lower margin?
Yeah, so I think, Anna, I think it's realistic to see that energy prices will have an impact, that commodities and raw materials will have an impact. On energy, for example, in our company, we are substantially already hedged for this year in 2026. So we won't see a big effect in our business from that, both for electricity, gas and diesel. And on the commodity prices, let's see, this is not the first time that we see these potential spikes. We also had a few periods in the last 10 years where we dealt with these kind of things. So it's our job now to make sure that we negotiate well with all the parties involved, that we look at the total supply chain. And it's too early now to see this happening. There's always a delay in things like commodity and energy prices. And we will monitor this very carefully. And we have good systems, strong teams. And it's our job to make sure that we mitigate this as much as possible. And our own cost programs and price investments are two elements which are a strong base.
Okay, so too soon to say whether you have to put up prices then as a result of this, Frans. How do you rate the consumer right now? Are consumers showing signs that they are already pulling back as a result of geopolitical events?
I think it's fair to say that consumers both in Europe and in the US see this uncertainty coming and are more cautious to spend. We are in a very robust business, namely the food business, which is 96% of our total sales. But people are also more value oriented. And that's why we have those propositions in our stores, in our 9,500 stores, both on the East Coast and in Europe, to also have own brand propositions with opening prices, which are much better. Price investments in the US are strong also in the coming quarter. So that's what we try to do, Anna, to make sure that we come across our customers as a understanding retailer, understanding what customers and society and communities have to go through and how they have to deal with uncertainty. And we would like to be a positive factor here.
And Frans, you touched on the increase in e-commerce and the upside that you're seeing there, particularly in the US. Are you seeing more customers in the US reluctant to get into their cars and go to the stores, and so they're executing more orders online? Is that a trend that you're seeing in a material way, and does that continue?
No, we don't see we don't see our e-commerce growth for that reason. But we see that we have a 14% growth of e-commerce in the US. We have now more than 10% e-commerce penetration in our sales. It's a combination of the assortment, the proposition, but also the partners we work with, like Instacart, Uber, just new as a partner, and also DoorDash, of course. So I think a strong proposition, a strong assortment, proper pricing, good own brands. I think the whole proposition in an omni-channel fashion gives reason to customers to use us both online and offline. I think that is the main reason there. We are very happy with those results. We also have a profitable e-commerce proposition, as we shared with you a couple of quarters ago. And if you then look at the total performance of the total company, we also confirmed our guidance for the full year. We see a double-digit e-commerce growth also for the remainder of the year, and 4% margin.
Okay.
And I think we reconfirmed the guidance as we had in the beginning of the year. EPS going up with almost 9% in growth. So I think strong numbers here, and under the volatility and the outlook of the year, we reconfirmed our guidance. But we are super alert and super focused on delivering in 2026.
Frans Moulin, thank you very much indeed for your time on the back of those results and change at the top, of course, at least coming through from 2027. Ahold Delhaize CEO, at least outgoing CEO, but again, not until 2027. So a focus there in terms of what they are able to do to mitigate some of the cost impact. It seems that they have options, whether it's the own brand and the move down there, and whether or not the margin, which is healthier in the US than it has been in Europe, and that's been a story for Delhaize for a while, and whether or not, he didn't answer directly your question, Anna, as to whether or not that margin takes a bit of a squeeze.
Yeah, too soon to say.
But they seem to be focused on making sure that the consumer doesn't have to cough up that much more.
But it's going to be interesting. Still. Shipping this stuff around, diesel, that costs a lot of money right now. But we still don't know what's going to happen on the agricultural side, what's going to happen with food prices. That appears to be something that is still in train, but difficult to understand at this point. Coming up, Philips delivers a strong beat, boosting confidence in the Dutch firm, and whether or not it can withstand these shocks in the Middle East. The CEO is next. This is Bloomberg. Wednesday morning, good morning. 30 minutes to go until the start of trading here in Europe this morning. And futures are pointing to a very positive picture, particularly here in Europe. As you can see, we're up by circa 1%. There's a bit of a tailwind coming out of the States. There's also a set of quite good earnings numbers coming through this morning. It's going to be interesting to see how Ahold trades, how Infineon trades. It looks like it's going to be strong. We've got Philips on deck. We'll talk to them in just a moment. So the corporate news is also adding to the upside kind of momentum trade story that we're certainly seeing in equities.
Yeah, so the corporate story is certainly set to influence the trading day for equities ahead. In terms of bond market story, then, we do see yields coming down, actually, in contrast to yesterday. So yesterday we saw yields going higher on concern about what was happening in it was a global picture, wasn't it? US Treasuries, we've seen the 30-year yield go above 5%. So we saw the rest of the markets sort of reflecting that Monday into Tuesday. Well, later Tuesday and now we see a move away from that. And yields are coming down, reflecting that weaker oil price, perhaps. Still, so we're down by 1.8% on Brent at 107. Let's move on to check what's going on in FX markets, because this could add some volatility to things as well. The yen has been moving away from that 160 mark, so we've got some strength coming through in the Japanese yen. And April the 30th, we're seeing basically the yen building on the gains that it made on April the 30th, when people familiar told Bloomberg that there was some intervention from the Ministry of Finance taking place. And so people are asking questions today, again, Tom, as to whether there is further intervention taking place. That's certainly the question to ask.
Quite a start move there in the end. We haven't had it confirmed yet, but certainly there is speculation out there, isn't there? Let's get back to the earnings story. Philips reporting first quarter earnings that beat expectations after strong orders, giving confidence the Dutch medical technology firm can withstand the burden from geopolitical turmoil and rising costs. Joining us now is the CEO of Philips, Roy Jacobs. Roy, thank you for your time. What is the Middle East impact on the business? Where is it being felt most acutely? You beat on the earnings, but clearly there will be an impact, presumably, from the US-Iran war. Where are you seeing that?
So you saw indeed that we had, as Philips, a strong start of the year. 6% order growth, 4% sales growth, and we had margin expansion by 40 bips, despite higher tariffs and additional cost inflation. And also we do see that cost inflation will be an impact of the Middle East conflict. We are expecting energy prices, we're expecting component prices to go up. We're taking additional productivity measures to offset that, and we have, of course, built a very strong muscle and cost discipline also in the recent period. So on the back of that, we also reiterated our full-year outlook, where we continue path to driving profitable growth with solid cash generation, and as a result, we also even doubled the net income in the first quarter.
Can you just break down for us, Roy, where across the supply chain you are seeing the most acute rise in prices? Is it helium? Is it other input costs? Where are the strains most acute right now?
Yeah, so if you look on our supply chain, you call out one very important part, which is helium. Helium is, of course, for medical imaging crucial. 1/3 of global helium is used by medical imaging resources. We have come out with an innovation, the helium-free, that actually does not use significant amount of helium to do the same diagnostics. That is going to be the new industry standard. And actually we need that because 20% of helium capacity has been taken out by the conflict in the Middle East. So we need to ensure resilience in the supply chain for our customers so that they can continue to scan their patients. So that's one where we are really dialing up. We see also increased momentum and demand for our solutions. So that's a way to counter. On the other hand, indeed, we see energy, electricity, we see plastics, we see some components going up in price or expected to go up in price. And actually, we are proactively dialing up our measures to counter that. One example is, with the help of AI, we are now doing 30% of all company coding with the help of agents and AI. That's a big efficiency driver that actually helps to offset the cost rise. We also had 126 million of productivity savings already in the first quarter. In the new 3-year plan for Philips, we laid out a 1.5 billion productivity plan. We are very well on track with the first start in the Q1, but we're also dialing up further mitigation in the rest of the year. And that actually allowed us to then also say within that, we can, in due course of the year, mitigate the increases and remain firm on our commitment to the year, also in margin perspective.
Roy, good morning. It's Guy. I'm hearing you talk about efficiencies. I'm hearing you talk about self-help and measures you can take to deal with some of the cost increases that you are seeing. Does that imply that actually you don't have much pricing power right now? How much of the cost increases that you're taking can you pass on to your customers?
Yeah, from a price perspective, and we had that already also with the earlier challenges, even after COVID, we have selective pricing actions we take. On the consumer side, we need, of course, to also make sure that we remain competitive. So we are offsetting first and foremost with on-cost actions. Then where need be, we also, of course, put on some selective pricing. In the healthcare side, it's more difficult because you have longer-term contracts, you have committed conditions that you have agreed upon, and also the pull-through is longer because you first need to kind of get your orders in with the new prices and then sales comes in later. So you see that there's a bit of difference where you can do selective pricing. Main remediation that we count on is indeed self-help. Is a lot of cost actions that we're taking, supply efficiencies that we are driving. How can we run Philips in a leaner way? We have been doing that by generating $2.5 billion of productivity savings over the last 3 years, and we want to do another $1.5 billion in the coming 3 years.
Okay. Can I ask you about how much you're paying for semiconductors and chips? How much demand? How much have prices gone up? What is the story there in terms of your supply chain?
So, of course, in our demand, we see that with our innovations that becoming more and more also AI-powered and AI-driven, of course, we also use chips. Now, we expect price increases. That actually is baked into the guidance that we have. But I think what's really exciting is that if you look to the quarter, we doubled the amount of regulatory approvals on new innovations that we have. One of those being, for example, a smart heart innovation, AI-powered, which actually reduces the clicks from 14 to 1, so it becomes much easier to do an examination. It goes faster for the patient, so better experience. So we see indeed that we are building in AI in every single product that we have. It has an impact on healthcare, but also for the consumer practice. And therefore, we do need chips. So we make sure that kind of we get the right access. And actually, we have built that into the plan as well.
Roy, good morning. I want to ask you about AI. You've already mentioned how you've been using it internally, but there's a lot of focus on how AI can deliver benefits broadly for healthcare in many different areas. And I wonder how you make sure that some of those benefits of AI accrue to Philips. Is it about control of data? Is it about control of workflows? How do you make sure that you get those benefits and not software providers, hyperscalers and others in the supply chain?
Yeah, so when you look at kind of the strategy that we laid out, we said kind of our innovations are platform-based. The platform is a combination of hardware, software, and AI. And actually that combination combined delivers the value. I give you, again, go back to the example of the helium-free MRI. You need a hardware solution to come up with a helium-free magnet. Then you need a software solution to work on the imaging workflow. AI helps us to generate the image much faster, but also to simplify the workflow. We sell that as one package to our customers so that they get the benefit, both on kind of how they manage more patients through the workflow and get better outcomes. That's how we can capture the value. In monitoring, we are the #1 leader in the world. We have the biggest data set, and many customers want to work with us on the data together to provide better alarm management, better surveillance management. So very specific applications that are deeply clinically embedded, and therefore actually combined with the work that we do with hospitals really can actually support what we do with them. We had an example of the 10-year technology partnership that we closed with WellSpan. Those are examples of where you see that actually together with customers we are embarking on a roadmap where the latest technology and especially AI helps them to deal with their staff shortages, to deal with more patient volumes. And actually we are getting kind of support from that in terms of the deal that we get, but also they get the latest technology over a longer period so that they get access to the latest and greatest all the time.
Roy, always great to catch you up. Always great to get your insight. Thank you very much indeed for sharing some of your time with us this morning. Roy Jacobs, the CEO of Philips. Let's turn to the semiconductor sector. We're just talking about it a little bit there. Infineon raising its full-year guidance this morning. Its AI power chip business continues to boom. There are also some signs of a more positive picture emerging into the auto sector. A few minutes ago, I caught up with the CFO, Sven Schneider, and asked him about pricing for AI power chips and how much longer demand will outpace supply.
if you look at the current fiscal year, there is very clearly the supply is limiting the revenue, and that's one of the reasons why. And it's a great timing, because you may be aware that we will be opening our next module in July in Dresden. This is exactly the additional capacity we need to bring more AI and also related capacity to the customers. So this will eventually over time fade out. So currently we are in an allocation phase, very clearly, but the more capacity we build, the more capacity the industry builds, the better the situation will be. Now, to your pricing question, indeed, as we said last time already in the earnings call, on the back of this super strong demand and on the supply-demand situation, there is a possibility, and we have used them and advised our customers that we will raise prices in AI and adjacent areas from the 1st of April onwards. So there is a positive trend which we believe will continue at least during this fiscal year.
Do you see any issues currently coming out of the Gulf relating to things like helium supply? Are you in any way being impacted by what is happening here? I'm hearing a lot of chat in the industry about concerns around this, but I'm wondering if they're real yet.
Yeah, so there are, I think, very, very different perspectives on that, depending on how an industry is affected. For us, yes, we need helium. Yes, we need the transportation of our products also through this area. But as of now, we do not see any material supply issues. And why is that the case? It's because of the multi-sourcing strategy we have. Helium and other goods we need in order to produce our chips are sourced not only from that region. What we clearly see is price increases for helium, price increases for gold, for copper, for other commodities, for freight and logistic costs, but that is baked into our revised guidance.
The CFO of Infineon, Sven Schneider, speaking to me a little earlier this morning. The stock was up circa 6% yesterday. I'm seeing some calls higher today, but some calls lower as well. Maybe it's better to travel than arrive when it comes to Infineon this morning. A lot of mentions of helium on the show this morning. I don't think we've mentioned helium quite so many times as we have this morning, but that's the times we live in. 7:42 here in London. Coming up on the programme, the European Union calls for a swift return to the agreed terms of the trade deal with the United States. We'll speak exclusively. We'll be hearing from the US ambassador to the EU. For the latest details next, this is Bloomberg. Welcome back to the opening trade. Now, the European Union wants the main parts of a US trade deal adopted by July, pushing Washington to respect its previous commitments. This after President Trump said he would slap 25% tariffs on EU autos, accusing the bloc of failing to honour its prior commitments. For more, we're joined by Oliver Crook, our Chief Europe correspondent for Bloomberg TV in Brussels, with a guest. Ollie, good morning.
Yeah, absolutely, Anna. So a lot of confusion at the moment about where the status of that EU-US trade deal is. Everyone says they're sort of adhering to it. The real question is whether or not we're going to get more tariffs from the United States. And we're joined now by somebody who can shed some light on that very question, Andrew Puzder, who is the U.S. ambassador to the European Union, who's been working on this trade deal for a long period of time.
Yeah, you got that right.
And so, of course, a part of the frustration here from the U.S. side is that it's taking so long to actually implement this deal on the European side. Is that what this auto threat is about? Is it just about that? Is it about retaliation to the Germans for some of the comments we've heard from Chancellor Merz? What is this about?
If you look at the president's Truth Social post, where he announced the increase of the tariff on automobiles, it specifically says the problem is the delay. There's been now, for nine months, the European automakers have benefited from the trade deal. They got the U.S. tariff on trades reduced to 15%. The United States has gotten no tariff reductions on anything, over this 9-month period. We've gotten absolutely no benefits. The process was initially moving pretty quickly. The Commission approved the deal. The Council approved the deal. Looked like we were going to go forward. And then the Parliament started to drag its feet and canceled hearings, and it dragged on. And finally, when they come up with a vote, they want to renegotiate the deal. They've added 4 or 5 points that changed the deal. So I think that what the president was saying, look, this has gone on long enough. We're done debating. We are negotiating. We cut a deal. President von der Leyen and I cut a deal in July. Our representatives put it to paper in August. We cut the tariffs retroactive to August 1 on automobiles. You've done nothing for 9 months.
So establish for us what the timeline is now for these conversations. We hear from the European Union they would like to get this accelerated, get it through by July. Is that fast enough for the United States? Would that be sufficient action to dodge those 25% tariffs?
I don't know that July would be fast. That's a year. And that's a year since von der Leyen and Trump met and agreed to this. That's a long time. I think the president's saying he's pushing for something more rapid, something quicker. Really, all Parliament has to do is approve the deal. And then there's no need for trilogues because Council's approved it, the Commission's approved it. All the Parliament has to do is say, yes, we're approving the deal, and we're there. So I don't know why that takes till July.
Well, as you know, those conversations will be happening this evening here in Brussels, the trilogue, that reconciliation and discussions about that trade deal. What is the message to them if they do not get this over the line this week or make significant progress? When can we anticipate those tariffs being imposed by the United States? Is the executive order ready to go at this stage?
President Trump, in his Truth Social post, said within a week, I think. He said, or next week. So on autos, unless we see some substantial progress, I think you probably should expect those relatively soon. What he does with other tariffs on, and this, by the way, this was a very limited increase. In other words, it just was aimed at autos. He doesn't even mention auto parts in this. So it was a very specific increase. I think it was meant to say to the European Union, you're not moving fast enough. You're trying to change the deal. That's not going to work. So you got time to fix it. Time is now.
Yeah.
And it's not July. It's not next year. Now, if there was a strong message to the United States that we're going to approve this deal, we're going to approve it as we agreed to, and not change it, and we're going to do that quickly, then you probably have a chance that the president would take another look at it. I mean, he prefers deals to trade wars.
And I think that's the message we've heard from everybody in Brussels. That being said, they did say that everything is on the table if things do not go in a way that they can that they're happy with. Is the United States willing to walk away from the trade deal if it comes to that?
If the European Union doesn't abide by the deal that was reached, if a deal isn't a deal, then the United States, I think, would walk away from it.
And then thinking about what is inside the deal, because of course there are very specifics, but then there are other things that are more abstract in terms of the non-tariff barriers, right? This is something that obviously these can be defined in a great many ways.
That's the tough part, which is the interesting thing is the tariffs aren't supposed to be the tough part.
Right.
The tough part is the non-tariff trade barriers. But geez, we're having a tough time even with the simple part of the agreement.
But do you see those as sort of fully segregated, i.e. the tariff is part of the one deal and then the discussions will be separate on the non-tariff barriers? Or does another conversation reemerge where you get another threat of 25% auto tariffs because of some non-tariff barriers? Or is that deal, you think, fully segregated from that conversation?
So we've lowered our tariffs. Now European needs to lower its tariffs. And during that process, we need to be discussing these non-tariff trade barriers, because if you lower your tariffs but you keep in place barriers to trade that are just as bad as having the tariffs in place, then you really don't have a deal. So we're going to need to talk. They've been identified in the document. We're going to need to discuss them. We've already made some progress, and we made progress on the Corporate Sustainability Due Diligence Directive that was cut back. I was hoping we'd see progress on the deforestation regulation, but I'm not. They issued new guidelines. I haven't had a chance to go through them in detail, but I don't think we're there yet on deforestation. So we're going to need to keep negotiating, but it needs to be done in the context that the tariffs are down.
And one of the main sticking points for the Europeans, something we know they're still quite unhappy about, is the steel and aluminum tariff, the scope of it, the size of it, 50%, and the scope of it, all the things that it applies to. Is there scope for sort of a reduction for that for the United States? What is the U.S. position? Is there any scope to change that in these negotiations?
So on steel and aluminum generally, both the United States and the EU have a 50% tariff because we're both trying to fight overcapacity from China. The United States also has a tariff on derivative steel products because obviously, again, the same. You don't want to let the Chinese dump this subsidized, inexpensive steel in the market through putting it in products and then selling the products to the U.S. In the framework trade agreement that President von der Leyen and President Trump agreed to, it says that we're going to talk about ring fencing iron, steel, and aluminum. And so I think we need to proceed with that discussion. But to proceed with that discussion, we need to get these tariffs down.
And a final question, I'm sure you're getting some questions about this too. We had the other sort of big news over the weekend as far as Europe is concerned, as the President of the United States saying they're going to pull 5,000 troops from Germany in the next 6 to 12 months. That number may increase. What message do the Europeans interpret from that action?
Well, we have about 100,000 troops in Europe. I think we have about 40,000 of them, 38, 39,000 in Germany. So there's still going to be a significant military presence. But I think the message is when the United States when the United States determines that a particular action is in its best interest, the best interest of its allies, if you expect support from us, we expect support from you. And if it means using the military bases that we're paying for in your country to defend you, if it means flying over your country that we have our bases there to defend, then you should back us up. And if you don't back us up and you make comments that are derogatory of the position we're taking, then maybe you're not as good an ally as we thought.
Well, Andrew Posner, thank you so much for your time today. The United States ambassador to the European Union, focusing on that trade deal, trying to accelerate that process in July may not be good enough.
Ollie, thank you very much indeed. Oliver Crook joining us in Brussels. And our US colleagues a little later on will be speaking to the USTR, the US Trade Representative. He, of course, is Jameson Greer. That will be happening from Paris as he attends the G7 trade meeting. That exclusive conversation, 1:30 p.m. London time.
Quick chat about where we go next then. Market open is due shortly and futures are pointing higher. We've had so many earnings out, so we'll be looking for which of the companies that do well out of that. I mean, Zalando is one that I see could be on the move higher. I see various calls around Infineon, actually. I mean, so that one certainly going to be one to watch.
Absolutely. Ahold is going to be out as well. You've got the tech story to factor in, but we're up circa 1% after a decent session yesterday.
There's some decent catalysts alive. The yields are lower, oil prices are lower, the dollar is a little softer as well. We've been talking about the Japanese yen and potential intervention there. Futures pointing to a very solid session after gains of 0.7% yesterday. Futures currently pointing higher by a full 1% then in Europe. Coming up, it is the opening trade. This is Bloomberg.
Good morning. How are you doing? Wednesday morning. There's a lot going on. There's a lot to factor into these markets this morning. This is the legacy out of yesterday. This is the US session. This is where Europe went out. There's a little bit of upside still to price in. But after hours, you get AMD. You get all kinds of other factors that could potentially lift the European stock story this morning. Oil prices are down. The president is making positive comments, the US president, about the situation vis-a-vis Iran. That seems to be helping out the mood as well. You've got this kind of melt-up, let's call it that, in the tech story, continuing to drive things. Do you have fear of missing out this morning? I think Tom's about to tell you what you're seeing in the future story.
Well, the handoff has been very strong, to your point, Guy. The Kospi is still king over in Asia. You've got the Samsung at $1 trillion valuation. You saw the rally in the semiconductor chip stocks yesterday, stateside. Fresh record highs for the S&P 500, fresh record highs for the NASDAQ 100. So all of that is a handoff for Europe. And currently, futures pointing to a very strong session, pointing higher by 1% after 0.7% gain yesterday. FTSE 100 futures looking to add 118 points. So a decent session as well here in the UK. DAX futures looking to add 0.9%. Individual stocks as well in focus, Anna.
Yep, absolutely. Let's focus in on some of those. So Novo Nordisk, strong numbers coming through there in terms of the estimates. So the numbers certainly beating estimates. They're talking about the Wegovy pill, which of course is the focus for this earnings season. They're saying success of that will limit the sales decline that they're going to see from other parts of the business. Infineon also in focus. There again, we got numbers that came in above expectations. The spending boom on AI infrastructure, of course, has been something that has boosted that company. We'll also keep an eye on the retail space. In the UK, we've had an update out of Next talking about pricing, which is interesting. And Zalando also in focus in the retailers. The first quarter earnings reassuring on the e-commerce outlook, according to some analysts this morning, Guy.
OK, here we go. Time for the Wednesday session. We're expecting a positive performance out of Europe at the index level. Circa 1% is the overall number you're looking for. A more stable picture emerging for the FTSE after it returned yesterday. So let's see what we get here and how the individual equity story bottom up is going to get priced into the indexes as well. Because the legacy out of Asia and the United States is a fairly positive one. The Stock 600 is up by 0.4%. The FTSE's up by 0.5%. Both are kind of stable at the moment. I'm not sure sure where the action is going to come from yet. The FTSE picks up a little bit. The CAC is expected, 0.9% to the upside. Might take a while to get the DAX going this morning. The IBEX is up by circa 1% as well. So the kind of positive performance we were anticipating, that circa 1%, largely being delivered upon at the moment. But let's see how Germany trades. There's a lot of interesting stocks in that market this morning. Tom.
Just one sector in negative territory so far, and that is energy on the lower oil price in the session today. So energy down 0.5%. Every other sector across Europe currently in positive territory. The gains being led by basic resources. You've seen strength in pricing for gold and copper and silver. And basic resources is rallying on the back of that, up 2.3%. Travel and leisure, interestingly, gaining 1.7% after being one of the laggards across your sectors yesterday. Lufthansa coming out with a smaller loss than had been expected. Banks also doing well as well, gaining 1.6%. Again, across your sectors, there is strength. Tech gaining 0.9%. That was the leading sector for the upside for Europe yesterday, and it's putting in a positive performance as expected once again, Anna.
Yeah, so most sectors then in positive territory, as you say, only energy to the downside. Some real divergence, though, between the various players, and I'll just focus on one that's going lower this morning, and that is Ahold Delhaize. I wonder if the management story is anything to do with that, but that was an interesting conversation we had with the outgoing CEO seems to stretch, doesn't it? He's not going for a year, but still, there's a succession plan in place, at least there now. Novo Nordisk up by 5.8% on the back of the numbers there that on various metrics seem to beat analysts' expectations, much revised of late. And I'm interested in Philips and where that one opens. We spoke to the CEO earlier. It's halted, it seems. So a lot of interest, at least, in that particular stock. We'll wait to see which direction it lunges in.
Infineon's up 1%, 2%, no, 2%. Mm-hmm. My early call was 5% up. It was up 6% yesterday. Then I saw a call for it to be down 5%. So I think the market was struggling early to price that one. But it looks like we're getting a positive performance coming through. But it's interesting. Novo is very strong on the back of what it's delivered this morning. But what is interesting as well is that you've got the metals moving higher. So you've got a series of commodity stocks also on the upside. But oil is definitely down. One day to the next. How do you get a clear read on what is happening there?
Absolutely, with oil prices down 1.3% today. That's today's move. 108.44 is where we trade on Brent. Joining us now to talk about the markets in more breadth, Helen Jewell, International CIO for Fundamental Equities at BlackRock. Helen, very nice to have you with us. We've got lots of earnings coming through this morning, so no doubt the earnings conversations will factor into what we're thinking about this morning. We started the programme, Helen, the last hour, talking about tech and the strength that we're seeing in tech stocks in the US yesterday. Some of them up by more than 11%, things like Intel. AMD numbers after hours looking strong. Samsung now $1 trillion company. There's a big tech theme happening here. Is the narrowness of these gains, is that a danger or is that an opportunity? How do you think about that?
Yeah, good morning, Anna. And you're absolutely right. I mean, the tech names have been fantastic, and they are what is driving the market and resilience in the market at the moment. And it's not just those names that you said. We also see some in Asia as well. Hynix, incredible, TSMC, so some really incredible names globally in this space. Now, when it comes to the narrowness, well, on the other side of that, it's not just about AI. It is also about energy. And when it's energy, it's not just about the oil and the oil price, even though, of course, that has been very strong over this quarter. It also is the breadth of those names. You've got power demand, you've got cooling infrastructure. There's a lot going on there. And I would also say when we think about diversification, it's probably the one thing that Europe has got going for it at the moment, because actually you are seeing more breadth in terms of what Europe is able to deliver. The earnings growth has not been as high as we've seen in Asia and in the US, but you are seeing more breadth in Europe. So is it a worry? No. Is it something we need to keep an eye on? Absolutely. Is there ways that you can diversify? Yes, that's where Europe is providing that little bit of diversification.
OK, so in terms of that diversification, you go to a wider suite of companies then in Europe that are set to benefit from the AI trend? Is that still the message?
Well, it is and it isn't. I mean, there are more companies, there are a breadth of companies, but there are more companies in the US and Asia that benefit from AI. That's just a fact. Within Europe, it tends to be more in terms of the energy infrastructure space that we see it. But it's actually more of a breadth in terms of what is delivering some of those returns. Now, they are smaller returns, Anna, so we are talking about a breadth with a smaller overall number. But that is important when we're looking at diversification. And I think that is why what we're seeing is we're still seeing actually flows hold up reasonably well in Europe, even though actually the returns are perhaps a little bit stronger in the US and Asia. Flows are still holding up well in Europe. So it isn't just about the AI theme in Europe. We are seeing banks' names still continue to do okay. In the consumer space as well, you mentioned it this morning. Yes, there's diversification, but it isn't a case that there is one set of numbers and names that are doing very well and another that are not. You are seeing a little bit more diversification within Europe.
It sounds like you're telling me that diversification equals underperformance.
No, I'm not absolutely not saying that. I mean, diversification gives you risk-adjusted returns, and that is something that you absolutely need. If you are going 100% all in for where you think the high returns are going to be, maybe that's not quite within Europe this quarter, maybe not for the next few. But I don't think, I mean, it goes back to Anna's point as well. If you put everything into where AI and where the US is, you're not going to have a well-diversified portfolio. So
why do I want a well-diversified portfolio?
Why do you want a well-diversified portfolio?
No, in all seriousness.
Because
I'm getting massive outperformance if the chip story carries on, if the tech story carries on. Why do I want to be diversified?
Maybe you don't. If you want to avoid drawdowns of significant basis points on any given day, that's where the risk is. And again, you are seeing that. Let's not forget, you've seen moves yesterday, last week. You're seeing moves, quite considerable moves. I mean, the three of you see that day in, day out. Of triple-digit basis point moves in markets, in stocks, therefore in any portfolio that is focused in that space. So if you are willing to take huge undiversified bets, then absolutely you go for it, Guy. But that's not how we build our portfolios.
See, it turns out Guy's all in on the AI trade.
There are people that are, and they're chasing this narrative, and the returns are epic. But most portfolios aren't structured that way. You can't have that level of overweight.
Well, another key question we've been asking, and kind of on repeat, but I think it's worth putting to you as well, Helen. And it's interesting. The Man Group CEO was talking to this to Bloomberg as well, and saying that for her, head of this hedge fund, this was a key conversation as well, which is the gap between the equity market performance, record highs, and the reality of higher prices and fewer products as a result of the closure of the Strait of Hormuz, and whether or not that gap closes and how to think about that. How much of a concern is that, and do we need to think about future-proofing portfolios for the second half of this year if that all comes to bear?
Yeah, I mean, the key thing there is that earnings word again. So the earnings have been incredibly resilient over this quarter. You're actually seeing earnings growth in every single region, and that includes Europe up 5%. So far, obviously, earnings season is still ongoing. Now, of course, a lot of that mathematically is driven from where so much of that earnings has come from. It's come from the materials, it's come from the energy, it's come from the AI-exposed names. And they are the bigger market caps within the index. So you have that multiplier effect. On the other side of things, travel and leisure weaker, but travel and leisure is a third of the size in the stock 600 than the energy stocks. But again, this is why diversification in portfolios is important, because it is something that we need to be thinking about. Actually, in some ways, it's the other way around. The Strait of Hormuz opens, that energy pullback and the energy price that we've seen go up, that will be a pullback in terms of some of the earnings numbers. The earnings numbers this quarter have a lot been supported by the strength of those earnings numbers, those energy numbers. But it is the AI theme as well. The AI theme is so dominant not just in the AI theme, but again in these energy infrastructure plays, that is the theme that actually is the longer structural theme that is driving markets at the moment. So, yes, there'll be some volatility around the edges, but we still do need to be kind of concerned or thinking about what we were talking about in the first month of this year. And the first month of this year was about all of the CapEx spend and how much of the CapEx spend will actually come through to revenue numbers and maybe any lumpiness that we might see in that. And that's what we're trying to protect in with portfolios. So you've got the energy piece, and you've got the AI piece, one more cyclical, one very structural at the moment, but not a straight line structural spend.
And it was interesting to hear from Roy Jacobs, the CEO of Philips, saying he is seeing some efficiencies as a result of AI as well. Does that mean that we can just look through rate increases then? AI, energy, more important than anything that the central banks do on higher rates?
At the moment, it does seem like that way. The way that actually I've been looking recently at perceptions or where we might go in terms of rate hikes, and it's still looking that we'll be flat with rates. We're taking out rate cuts, is the impact on the currencies. So actually, if you look at dollar and dollar strength, the yen as well has actually been quite an interesting play. That, in some ways, is what we're seeing more coming through in terms of the markets and conversations with companies than we are necessarily in terms of the consumer. I am concerned about the consumer for the second half, but actually in terms of what we're seeing coming through with numbers, there is actually a real resilience in the consumers that perhaps we should be baking in a little bit more than we are at the moment. But it's the impact of rates on currencies, which I think is particularly interesting at the moment.
The earnings season is we're in full swing. You are going to get the skinny on lots of earnings calls, and you're going to get them all amalgamated. What is there a message already that we can take away? Because this, as you say, the E looks pretty good this time round.
Yeah.
But going forward, what are you looking at? What are you picking up on? What are your models telling you about what actually companies are saying at the moment?
Yeah, there's very few companies that have talked about the implications of the Middle East on numbers. Luxury we saw a few weeks ago, but since then there have been fewer. What we are seeing in a little way is a little bit of stabilisation in terms of the multiple. The multiple for Europe is hovering around 14.5. That's a decent multiple, slightly lower than it has been. It's certainly not rating upwards. So I think it's in the re-rating of the multiple that you're probably seeing some of this uncertainty coming through at the moment. It's not going up. It's maybe come down just a smidge. But actually, we're not actually hearing as much from outside of those luxury goods companies that we might have done, and the airlines as well, which I know is something that you've been super focused on recently.
Yeah, you had Lufthansa out this morning. Helen, nice to see you. Thank you very much.
Thank you, Guy. Thank you.
We always appreciate it. Helen Jewell, International CIO, Fundamental Equities, joining us from BlackRock. Let's take a look at what the Core 6 looks like this morning. This is the picture that we find ourselves with. Generally a very positive one, as you can see across Europe. Tech in particular on the front foot. ASML is up by 2.5%. Schneider's having a fairly good session as well. But take a look at the left-hand side of your screen. Novo, absolutely smashing it this morning. That stock strongly to the upside. Let's get some more details as to what we are watching. I'm going to start with the airlines, actually. Chloe, over to you.
Good morning, Guy. Indeed, Lufthansa is doing quite well today after posting a smaller than expected loss. And so it was because long-haul flights and good demand for long-haul flights actually managed to offset some of the impact from higher fuel costs and labor actions as well. And given that the sentiment going into those earnings was quite down on airlines in general, those results were seen as quite encouraging, quite reassuring. And so we're up almost 3% for Lufthansa this morning. It's also a good story for BMW, which also reported earnings that were actually a little bit better than expected. The margin was hit by intense competition in China and by tariffs, but orders were actually quite good, and orders for electric vehicles in particular were quite good in Europe, and so that was seen as quite reassuring. And so we are up very strongly this morning, actually about 6% for BMW. It's also good news for Pandora, with earnings and guidance coming ahead of estimates. This is also great for a company that had been hit earlier in the year by those really high silver prices, and so we are up about 10% on the back of those strong earnings. Zalando is also in the green. There's a lot. Oh no, actually, well, it was in the green at the start. It had actually pretty good earnings and no impact from the Middle East, but this seems to now have been reversed a little bit, and we're down about 3% for Zalando. And finally, Ahold Delhaize is also down. It's also in the red this morning after some management shake-up. So the current CEO will be replaced by the current CEO of Kingfisher in 2027, and maybe this is casting some doubt around the strategic direction of the company, and therefore we are seeing a little bit of weakness, and we're down about 3.6% this morning.
OK, Chloe Melly, thank you very much indeed on some of the stocks on the move. There's been a bit of choppiness around some of them. Zalando is one, to your point, Chloe, and Infineon is currently now down 2%, having been higher early in the session. We are going to be speaking, by the way, I'm going to stay on the earnings story, because we're speaking to Norway's Kongsberg, seeing order intake more than double in the first quarter. We're going to discuss what is driving that performance with the company's CEO. The stock is currently up around 10% in terms of Kongsberg, at 10.2% right now. We're going to speak to Eric Lee next. This is Bloomberg.
Welcome back to the opening trade. Let's kick this part of the programme off with some data out of Spain. We're tracking the services PMI story this morning, and the Spanish April services PMI has come in really weak. It's much weaker than March, is the story here. So 47.9, so that is fully into contraction territory against decent growth in the month of March, which was 53.3. That means that the composite, so some suggestion of whether we're in growth or contraction territory for the Spanish economy, the composite is at 48.7, which is in contraction territory, which is really interesting. And actually tourist visitor numbers had held up really well. In fact, were really good in March. I wonder if that's changed in the month of April.
Sounds like what we need is a rate hike.
Grist for the mill. To your point, grist for the mill for those who say that the ECB should not be hiking rates given softer growth, even if inflation is higher. Let's get back to the earnings story with a focus on defence. You're seeing a very strong increase in terms of the share price for Kongsberg right now, currently up more than 9% on the back of some earnings strength from that company. The Norwegian defence tech firm reporting first quarter revenue up 26% on a year ago, following what it calls record high demand. Joining us now is Erik Lie, CEO of Kongsberg. Erik, thank you for your time. What is the key driver of demand right now, and does that continue in the quarters ahead?
Yeah, thank you, and good to meet you. I would say that in the geopolitical situation we see today, the demand for our main products like strike missile capacities and also nascent air defense systems, I would also highlight counter-US systems, are very much in demand these days and driving the growth we see currently.
On the air defense systems piece, Erik, there's a view from many in the industry that your system is best placed to make up for any lack in the Patriot system, that it's on many measures equitable to the Patriot system. Where is the demand for the air defense system coming from, and are you able to meet it?
You know, I think based on what we have seen in Ukraine and currently seeing in Ukraine, and also in addition to the Middle East, it shows that air defense is a fundamental defense system in the world. And so we see an increased demand for air defense systems in Europe, in Middle East, but I would also say that on a larger scale internationally as well. So the demand for air defense system is there. And if you look at NASAMS is the most sold air defense system in the world in its category. And we are including more counter towards threats like counter also jobs.
Obviously, everybody wants the product. Everybody wants to get their hands on it. The threat is enormous. We've got two hot wars that are running currently right now. Erik, can you build this stuff fast enough? Where are the bottlenecks? Can you deliver? What execution challenges are you facing right now?
Obviously, I think we on our end, when it comes to producing NASAMS equipment, we have enough capacity. We built up this as we see the demand is growing. At the same time, it's mostly focused on the supply chain to secure that the supply chain is able to ramp up in the pace we need. And that's where we work every day to secure that ramp up is progressing. And I would say that so far we have been able to do this, and obviously we will continue to do so.
Are there any key bottlenecks within that supply chain? Smaller suppliers that provide key pieces of kit, are they able to deliver? On the civil side of the aerospace business, we have seen years of challenges around the supply chain. Is it the same in the defence space right now?
It's both yes and no. I would say that we're facing challenges in some areas. At the same time, we are building up a more resilient supply chain, meaning that we have multiple sources to the different components. So that has been one way for us to address that challenge. The other mechanism we are using is to buy in stocks of what we call long lead items, so that we are able to deliver even though if we have a hold up in the supply chain. And that is a good method for us to secure that we are able to deliver on our promises in the order backlog.
Erik, good morning to you. We've got two active conflict zones, of course, that we reference almost daily, it seems. I wonder how you're prioritising delivery. On top of those active conflict zones, we have a structural shift towards Europe spending more on its own defence. How do you prioritise?
No, we are in constant discussion with our customers and potential new customers. So we secure that we are able to have enough visibility into their procurement plans so that we can ramp up and build capacity so that we are able to deliver when they need the different type of systems. So I think the visibility we get from the customers give us confidence that we can scale up, invest in our production capacity, both in Norway, but also in US, in Europe, and for instance, in Australia, as we do currently.
You said this morning, and I know Tom was asking about it a moment ago, you've seen increased demand for your air defence systems. Can you give us any size and scope on that, Erik? To what extent are we seeing, what fold increase in demand or interest are you getting for those products?
Currently, with the NASAMS system, we have sold that to 15 countries, and we expect that to increase. At the same time, we also see that existing customers for NASAMS, they are buying more because of the fundamental defense system aspect of an air defense system. I wouldn't go into directly to state how much we see of growth in the NASAMS system for the NASAMS systems, but generally speaking, we are close to a 30% increase in our revenue. So that gives an indication on how we are growing per year.
Erik, there's a potential deal. You announced a potential takeover of a sonar business in the US, Sonar Tech. Is that deal going to get through? There were some reports that maybe the US government was going to stand in the way of that. How confident are you that it's going to get through, and how important is that for your US business?
Well, we are working with the US government in this and awaiting a formal response. But we are also working in parallel to see if we could do this in a different way. I think we, as a company, together with Sonar Tech, has a good match when it comes to product portfolio and how we complement each other. So we just have to wait and see for a formal response from US government related to that.
Erik, Europe is trying to figure out how it is going to rearm. It is talking about spending significant amounts of money. As we stand now, what is your assessment of the rearmament program that Europe is looking to deliver? Do you think we're moving fast enough? Is it going to be successful? What problems do you think we need to solve right now?
The way I interpret Europe now is that they are doing quite a lot to being able to do this ramp up. Obviously, from a very low level, and it takes a while to secure that this ramp up is being, seen in enough defense equipment. But I'm quite confident that most of the nations in Europe are on this plan and on track to get to the 3.5% and finally 5% when it comes to NATO targets. So I'm positive. And I also, when talking to many politicians and governments in Europe, I also get the same feeling in that they are on a good track. If it's fast enough, it's a little bit difficult to state. I think EU is trying to harmonize platform and systems, and I think that's a good path forward because that will be a much more efficient way of being able to ramp up.
Erik, thank you very much for joining us. The Kongsberg CEO, Erik Lie, joining us there from Oslo, or from Norway. And interesting story there. I mean, harmonising the kit that Europe buys. That's been a theme that we've talked about for some years now, hasn't it? About whether Europe can really get on the same page. Yeah,
lots of national governments.
Hailing their champions.
Yeah, the money's there, but domestic politics gets in the way.
America doesn't produce many tanks. Europe produces a lot of tanks and fighter jets and things like that.
Coming up on the programme, we will pivot to another earnings story this morning. Continental shares surging after the German manufacturer sticks to its outlook amid risks of higher costs driven by the Iran war and potential auto tariffs. The market focusing on the upside this morning. We'll speak to the CFO. That's next. This is Bloomberg.
This is the opening trade. We are 30 minutes into today's session. Happy Wednesday. A very strong session for European equities then after a decent session in Asia and the US. Fresh records in the US. The handoff was strong. European stocks then up 1.2% on the benchmark. Over in Germany, the DAX adding 295 points, almost 300 points over on the German index. In France, the CAC 40 adding 1.2%, and a strong session here for the FTSE 100 as well, up 1.4%. The catalyst is there, a change in rhetoric once again from President Trump when it comes to Iran, to being more positive. You've got the earnings story and you've got AI as well. Guy.
The earnings narrative is really strong this morning. Look at what we're seeing in terms of the breadth of this market and what you're seeing in terms of the higher and lower stocks. 490 are up. Only 97 are down. That is, you don't see that often. A near 5-to-1 ratio. Volume is also supportive of the move that we're seeing in the market this morning, which, as Tom says, is driven by an earnings narrative, a decent legacy out of the States and Asia, a positive geopolitical story maybe developing as well. So that's all very positive. Therefore, let's talk about some of the leaders that we are watching here this morning. Novo, with its upgrade, is really rallying. That stock is up by nearly 7% this morning. It's off its earlier highs, but that is a very decent performance. Diageo also painting a positive picture as well. BMW up by 4.22%. Even some of the laggards that have been hurt recently are bouncing back quite strongly. So BMW up by 4.2%, Anna.
Let's move on to some of the other stories that we're covering for you then this morning. Guy, President Trump says he is pausing a US-led effort to help stranded ships exit the Strait of Hormuz to see if an agreement can be reached with Iran to end the war. He didn't provide details on what, if any, negotiations are in the works. His comments marked an abrupt shift from recent days when he had voiced frustration over the pace of talks and indicated he wasn't satisfied with Tehran's proposals. The yen has hit the strongest level in over 2 months this morning, spurring speculation that Japanese officials may have intervened again after stepping in to prop up the currency back on April 30th. And Samsung has reached a $1 trillion market valuation after shares in the world's largest memory maker more than quadrupled over the past year on booming demand for AI chips. The milestone came as the company's shares rallied as much as 13% in today's trade, making it only the second Asian firm after TSMC to hit the $1 trillion milestone. The gains boosted the Kospi benchmark above the 7,000 level for the first time. Guy.
Let's talk about another corporate story that we are watching very carefully this morning. Conti shares are up really strongly in the German market this morning. The first quarter results from the company are boosted by the sale of high-margin products, high-margin tyres and various other products. This despite actually the Middle East conflict threatening to trigger a surge in raw materials prices over the coming months. The company has stuck to its full-year guidance, which I think is being taken as a really positive picture for the stock this morning. Roland Welzbacher is the CFO of Continental and joins us now. Roland, good morning. Thank you very much indeed for your time. What gives you confidence, given the uncertainty out there, to stick to your guidance?
Yeah, good morning, Guy. Well, first of all, let me put it a little bit into context. Operationally, we started very strong in the first quarter. EBIT margin came in at 11.9%. That's 120 base points up versus the first quarter last year. Free cash flow net income also came in above last year. It's still a challenging environment. Markets are soft. We pay high tariffs with ongoing headwinds. And despite all of this, we were able to increase profitability at Tires and ContiTech. Of course, we're watching the Middle East crisis. We're trying to understand the impact this has. We're expecting now raw material prices to go up, along with transport costs and energy prices. And that will provide headwind for us as the year is progressing. We expect a low to mid triple-digit million euro amount additional cost. We're putting together a mitigation plan to offset a large portion of this cost. It has many different legs, the plan. First of all, we need to increase productivity in manufacturing, watch carefully the fixed cost development, stocking up critical materials, and we're also working on commercial measures. It's going to take some time before it hits us. We expect for the first time at the end of Q2 and then fully unfolding in the second half. And we're putting together a package to mitigate all of this. And this makes us confident we can actually confirm the guidance today.
How quickly are you seeing any effect already in terms of the situation in the Gulf? And how quickly can your mitigation efforts sort of kick into a high enough gear to deal with them?
It usually takes some time because we're not buying that much material on spot. So we have long-term contracts. That means it comes with a delay. We're expecting this to happen late in Q2, and then We'll see the full cost obviously coming in the second half. So we also need some time to put together measures to offset this cost. Also takes a couple of weeks. We'll be ready in a second half, and we hope we can fully offset this. But of course, we need to watch what's going to happen. We have a base case scenario in mind, and this is where we base our financials and our plan on. If this is going to change because the crisis is going to last longer than we expect today, then of course we need to look into the details and adjust accordingly.
Okay, Roland, so that's quite a lot of detail on the outlook. Can I ask you about the outlook for ContiTech and your plans with regards to that business, for your plans for selling the ContiTech unit? I mean, this is a business that, of course, uses rubber, plastic, fabrics to make conveyors, hoses, belts and the like, and all kinds of things that are going to be reliant on energy markets to a large extent. So do these developments have a bearing on the timing of the sale of that business? And if not, why not?
So first of all, we started to sell OESL. That was part of ContiTech already last year. We completed the transaction beginning of February, and now the focus is on the industrial business. The M&A process started early in the year. It's in full swing. We're making progress as planned. We're confident that we can sell ContiTech by the end of this year. Why is that? Because you have seen our financial results. It's better than the first quarter last year. Also, all the measures in order to separate ContiTech from Continental Group are progressing as well, almost complete. Credit markets are holding up. This all gives us confidence. Now, speaking of the crisis, of course, we also looked into the cost increases. It's a similar picture than for tires, although the magnitude, of course, is lower. And we're also putting together a mitigation plan. So the answer is it remains to be seen. Right now, we see no roadblock, and we're going ahead as planned.
Roland, in your first answer, you talked about the tariff impact. What would the impact be if President Trump does indeed raise tariffs on European autos into the US market from 15 to 25%? What would that mean for your business?
Well, first of all, we need to understand whether tires are really covered. Usually they are. It was a lot of talk about autos, though this is the first thing we need to understand better. Assuming that it does, we looked at the financial impact it might have, and to our best guess, it is a mid to high double-digit million euro amount additional cost we would face for 2026. And again, like we did last year, we need to look into mitigation measures. You know our financial results 2025. We were able to offset a large portion of the additional tariffs, and we're confident we can do that again.
In terms of, therefore, what comes next, you've stuck to your guidance, Roland, but I'm hearing a lot of uncertainty. At this point, was it the rational thing to do to stick to the guidance, given the potential for change later on this year? How certain should we be in terms of what you're telling us today?
Well, if you look in the past, it's not the first increase in raw material prices we have seen in the tire industry. We've always managed to offset this price increase in costs with measures to offset this over time. This gives us the confidence that we can do it again, whether this is raw material price increases or additional tariffs or other costs. The job is always to protect the margin. So we need to, of course, be very cautious when it comes to other cost development. We need to squeeze out every bit of efficiency in production. And of course, we need to think about commercial measures as well. So we're confident. This is why we confirm our guidance today.
OK, that's on the guidance. You've talked about the prices you might face, Roland, and obviously everyone's very aware of the difficulties with what's going on in the Persian Gulf right now. Are your questions about the future all about the price, or are some of them about availability? Do you have any concerns about the availability of any of the products that you need?
Of course, we're watching carefully what's going on. As I said, we're also stocking up critical materials to some extent, which should cushion us a little bit if it comes to disruption in the supply chain. We talk to suppliers. We try to understand the upstream supply chain as well to see as early as possible if there's any shortage coming. Right now, there is none which is significant for us. And of course, for every component, we have multiple suppliers, so we can switch to some extent. But as the crisis progresses, we need to be agile and need to watch closely what's going to happen.
OK, Roland, thank you very much indeed for your time and for that detail as well. On the back of those earnings, a beat coming through for Continental, and that stock is up more than 5% right now. Roland Welsbacher, the Continental CFO, with that detail.
OK, what else we've got coming up for you a little later on in the morning? We are going to be speaking to the Novo CEO. Novo Nordisk shares having a very strong session, better than expected quarterly income, certainly driving that upside. Wegovy, the pill, is looking to do well in the United States. Everything appears to be back on track, maybe a little bit on that front, and as a result of which the stock is up, outperforming much of the rest of Europe this morning. Details to follow. This is Bloomberg. 44 minutes past the hour. I have two words for you. Risk on. There you go. You can see the numbers on the screen in front of you. We are very positive in terms of the performance we're seeing out of Europe. Some of it's the kind of the macro picture. Some of it's just the earnings that we are seeing this morning, which are by and large, on average, quite strong and are certainly having a very positive picture. But there's a combination of factors. But the net result is what you can see on the screen in front of you. Another solid session.
Another solid session and supported, as you say, by earnings. Let's go to one of those positive earnings stories now. Novo Nordisk shares have surged after reporting better than expected first quarter income, lifted by its Wegovy pill sales of that in the United States. The Danish company has raised this year's guidance for both adjusted sales and adjusted operating profit. Let's bring in Bloomberg's Sanne Vass, who's in Copenhagen. Sanne, take us through some of the key takeaways here, because they really beat against some of the metrics that we were watching here. But the uplift to guidance still looked, it was there, but it wasn't sort of standout. So it's interesting to me the market has taken this quite so positively.
Yeah, well, I guess at the moment, any positive news from Novo will be well received by the market. One thing that investors have really been looking forward to is to see how it's going with the rollout of the Wegovy pill. Novo launched this pill in the US in January, and so it's the first time that we're really seeing the results of that in the earnings. And the numbers are encouraging. Novo beat analyst estimates on the sales of this Wegovy pill quite significantly. It said that more than 1 million people have been using the pill since its launch. And also during the media call earlier, management talked about that there are some signs that people are moving from competing products to the pill, which is good news, and it helped also for Novo to raise its full year guidance, and the market is rewarding it for that. But yeah, there's still a long way to go for Novo to regain that trust, and we are still expecting, and it is still guiding for a decline in revenue for the full year.
Is it good enough to regain ground against Lilly? That's the question everybody's asking.
And I think that's a bit too early to say, but I mean, Novo has really been betting on this pill to help it claw back some of the market share from Eli Lilly alongside other initiatives. So, of course, these results are a good start, but Eli Lilly, remember, has just launched its competing pill, and we're still waiting to see how that competition plays out. Novo management says that so far they haven't seen an impact of Lilly's launch on the scripts for its own pill, but it's definitely a major risk for Novo, as it was with its injectable obesity medicine.
Bloomberg's Copenhagen reporter Sanne Vass on Novo's results and the upside coming through for the stock. Thank you for that update. We're going to be speaking with the Novo Nordisk CEO, Mike Douster. That's on the pulse at 9:20 a.m. London time. So stay tuned for that. Let's get back to the tech story, though. This has been one of the key catalysts we've been watching through the last 24 hours. Infineon, over in Europe, of course, over in Germany, has posted a forecast revenue that beat analysts' expectations in the current quarter. You can see it's down a little bit, just down 0.4%. It's been quite choppy in today's session. This is the German chipmaker benefits from a spending boom on AI infrastructure. Let's bring in Matt Bloxham from Bloomberg Intelligence. Matt, what do you make of the numbers from Infineon, and whether or not their exposure to data centres can give them further upside through the quarters ahead?
Yeah, I think they were good results. Obviously, the shares have had a big run into this, which is perhaps why we're seeing them come off a little bit. You know, the kind of guide was encouraging, but I think the market had already kind of got there. And I think that they're benefiting from two things. One, that they're very exposed to the autos industry, and through the pandemic, autos manufacturers had stockpiled processes to kind of manage themselves through that supply chain issue, and that's coming back. So the autos manufacturers have been working their way through those inventories, and now incremental demand's coming through. And then there's this new market, AI data centers. Everything's about AI data centers at the moment, and chips are being used to help manage power. And obviously power is a massive part of the whole data center story. And so that's perhaps been an incremental, not expected source of demand for them. So I think those two things together are going to continue with the strong momentum.
And Matt, how excited are you about what we heard from AMD? They look as if they could hit a record today if they continue what they did after hours yesterday. I mean, this is seen by many as one of the companies that's trying to close the gap with Nvidia, of course, which has been doing so well after the data center story. So how impressive is AMD at the moment? Yeah,
very good. And it's a big gap. So Nvidia's revenues are about 7.5 times AMD. So it's massive, but they are kind of growing, kind of 50% plus in data centers. Again, there's kind of two axes to the story. One is they are gaining market share in the GPU market, graphic process unit, which is obviously where Nvidia has kind of created its big moat. But as AI shifts from training to inferencing, people are realizing that actually you need these kind of classical central processor generalist computing power in the data centers too. And so they're getting a second leg of demand from that part too. So yeah, really encouraging. The CEO making lots of very optimistic noises about their ability to outpace their own very ambitious revenue growth guidance. And so I think, we're going to see upgrades to analyst estimates on that one for sure.
What do you make of the rally in tech? Tom and I were debating this earlier. Are the numbers there to support it? Is this a blow off top that people are talking about? Is this the euphoria phase? Kind of, what do you make of the numbers you see on the screen in front of you?
I mean, I think certainly, 2 or 3 months ago, we were still in that phase of is the end user, the natural demand from enterprises coming through. I guess what you would take from the current quarter results is, yes, that there is durability to that demand. And actually, we're just seeing more companies go from proof of concept to kind of actual kind of real deployment. And that can only help. And everything you see, again, about the kind of CPU demand and more inferencing suggests that momentum is still there. So, I think that the signs are encouraging.
Where do you think, in terms of what we're seeing on the kind of the model level and Anthropic working with the financial sector, and we saw some pressure on the likes of Morningstar and Moody's and others in that space, how material is that? I mean, they're all just driving hard for revenue ahead of the IPOs. I mean, we're thinking of OpenAI and Anthropic. They're now valued on some metrics at $900 billion. How are you thinking about that? And how are you thinking about whether or not those IPOs drain a lot of liquidity out of the markets when they come?
Well, I guess we'll see how much they actually float. How much of the free float there's going to be will be the big question about how much liquidity they do or don't drain. It could be a super thin amount of liquidity they give. I mean, I think generally we're still in a bit of a discovery phase about particularly how these agentic solutions can help all of us in our daily lives. And I think there's a huge amount of effort going into understanding how agentic can kind of be deployed to improve workflows. So I think there's still a huge opportunity there. Certainly all of the feedback we get on Anthropic's Claude is incredibly positive. I mean, if I was a junior investment banker, I probably wouldn't necessarily be worrying so much about my job. I think if these things can be effective, it means I'm not going to be working 24 hours a day, 7 days a week, which is, almost what a lot of junior bankers do.
Somebody's dream.
Yeah, exactly. they may well be having a bit more of a work-life balance coming into without impacting the actual end product.
I'm sure someone will find them another IPO to work on.
Probably, yes.
Such is the world.
Matt, thank you very much indeed. Matt Bloxham from Bloomberg Intelligence. Let's look at what else we are thinking about throughout today. Then G7 trade ministers are meeting in Paris. We'll keep across that for you. We also have an interview with the US Trade Representative Jameson Greer, as the US, of course, threatens additional tariffs on Europe at 9 a.m. UK time. It's the ECB Chief Economist Philip Lane speaking on a panel on central bank independence in Berlin. We get data out of the US on mortgage applications and employment. The data out of the US yesterday was essentially broadly in line with forecasts. 1:30 p.m. UK time, we get US Treasury quarterly refunding announcement. And on the earnings front, Disney, Uber and Arm as well.
OK, let's talk about what is happening in these markets. Iran fatigue leaves tech to power equities higher. That certainly feels like maybe it is the narrative this morning. Scarlett's here, she wrote that. But that feels like the narrative.
Absolutely. Yeah, what you're seeing is that, it's helpful if energy prices decline for equities. We've seen that today. But you just need them to range trade for equities to kind of power higher. And I think a lot of it has to do with fatigue. So if you look at story count on the terminal for Iran, that peaked when you had the initial conflict. You got another little bump higher on ceasefire. And it's now lower than it was in June 2025. So the last time we had kind of tensions around. We've moved on. But tech, if you look at tech story counts, that's been, it's now above Iran story counts, and it's been flat throughout the time. And I think the key is that betas decrease between equities and the oil price. So, when you have energy prices rise, it certainly hurts your energy importers, your less tech-heavy ones. But when you have energy prices just range trade, other narratives can come to the fore because you've had volatility be lower, and that means you can have tech power U.S. equities in particular higher.
We seem to be willing oil prices lower. We're now down by nearly 3% on Brent. 106 is now the handle, Skyler. The longer we sit here, the lower oil prices seem to get. And the ceasefire seems to be holding. Everyone's willing that to continue holding. But are you also seeing signs that people are factoring in a higher for longer oil price? So it's falling, but our outlook, surely, we're not ignorant of the fact that the Strait of Hormuz is still not yet open.
Yes, absolutely. So as you say, oil prices are a bit lower today. I think there's some optimism around kind of a backing down from the Trump side of things. Today, certainly, they'll be watching out for headlines on whether or not Iran backs up those headlines or backs up that kind of progress in negotiations. But I think the worry is we've done too much doubt already in a couple of markets. So like gas markets, for example, if you look at the futures curve, that's been elevated across the curve for a while now, and that's now feeding into oil markets as well. So if you look at the Brent or the WTI curve, it's in backwardation still, but those further out contracts are drifting higher. So it's getting flatter on that recognition, and it's definitely seeping into your rates market. So if you look at break-evens in the U.S., the 10-year break-even recently reached levels that hasn't since 2022, and so there's definitely more concern about that oil price feeding into higher inflation longer term.
Skyler, has the Japanese Finance Ministry, or the BOJ, the Japanese Finance Ministry, I should say, intervened again? We've got the yen. We've got the yen higher by more than 1% versus the US dollar in the session today.
Yes, so we know there was intervention last week for sure at the tune of around 30 billion. And what you typically see is when they do intervention, they like to get kind of bang for their buck, because the idea is that you don't have a limited amount of dollars that you can use to buy the yen, and so you want to see as much upside in the yen as possible. And we are in a holiday thin liquidity week for JPY, so certainly we could be getting more intervention now. I think maybe the risk is that there's definitely a limit to that unless you get coordinated intervention or unless there's a change in fundamentals.
Bloomberg M9 strategist Skyler Montgomery-Koenig, thank you very much indeed on those key market moves that we're seeing and potential intervention there in Japan. The BTV of Bloomberg Milken Institute coverage continues, by the way. The pulse is up next. European markets up strongly. Stay with us. This is Bloomberg.